Today, we are going to start indirect tax laws and practice. This is the CMA final study material. I am Uma Shankar. We are going to study from here. The syllabus is 100 marks, out of which we have section A and section B. Section B is 80 marks, section B is 20 marks. Percentage basis. GST, custom and FTP. We have the syllabus. Okay. We are going to start now from GST portion. In GST we have first introduction, then we have under introduction we have what is GST, why GST is needed in India, how it is one nation one tax, dual GST model, methodology of flow, how the revenue is distributed from center and state, and what is GST and different definitions, levy and collections, which is the charging section. Okay, like this, we need to go forward charge, reverse charge, rates of GST, what is exempted supply, what is not actual supply, what is non-GST supply, what is section 9, subsection 5, return e-commerce operator and classifications. Then we'll go time of supply, value of supply, place of supply, ITC, input tax credit, how the registration process, what is the documents required for registration, what is tax invoice, credit note, debit notes, and like this we'll go proceed. Okay, now we'll go to the first chapter, first study note we can say. Okay, first study note is introduction, under which we're going to study fundamentals of GST, Constitution Amendment Act, what is GST, advantages of GST, need for GST in India, one nation, one tax. Okay, dual GST model, interstate and interstate stock transfer, GST Council, body of GST law, important definitions. So now we are going to start. Okay, first chapter. Okay, so fundamentals of GST. What is the difference between the direct tax and indirect tax? Direct tax is the tax in which payer of the tax and the sufferer of the tax are both are same. But in indirect tax, payer of the tax and the sufferer of tax are different. Okay, means the burden of the tax is the different person, and the tax paid by the person is different in that tax. But in direct tax, both the payer and the tax burden is on the same person. And direct tax is levied on income based. How much you earn the income, based on that we need to pay the taxes. But under indirect taxes, we need to pay based on supply. If we supply, we need to pay the taxes, not based on the incomes. And the direct taxes, it differs from person to person, but the indirect taxes does not differ because all are uniform and all are equal under indirect taxes. Then entire revenue goes to central government. Okay, here, but here it is distributed among central government and the state government. Here the previous year income is assessed in current year income, and here there is no such previous year assessment. It's based on fully on supply. When do you supply? You need to pay the tax. Here, the governing body, or we can say it is the CBDT, Central Board of Direct Taxes. Under indirect taxes, the governing body is CBEC. It was earlier Central Board of Excise and Customs, but right now it is CBIC, Central Board of Indirect Taxes and Committee. Okay, so here is the summary of difference between the direct tax and indirect tax. One more point is it is progressive in nature and it is regressive in nature. Next point, next concept, that is Constitution Act 101 First Amendment Act 2016. Means how it happened to a constitution. For levying GST or for the GST to start, constitutional amendment was required. Okay, so Constitutional Amendment 122 Amendment Bill. In bill, why it is written bill? Because for an act to levy, for an act to start, first of all, a bill is prepared and it is presented before the Lok Sabha and the Rajya Sabha. Once it is passed, then it goes to the President of India for its approval. Once the President signs, then it becomes the bill automatically becomes the act. Okay, so it is received the assent of President of India on 8th September 2016 and become the Constitutional 101 First Amendment Act 2016. which paved for the way for introduction of GST in India. It was enacted on 8th September 2016 with followed significant amendments. So what were the amendments under this act? First, concurrent powers were given to the parliament and the state legislature. Concurrent powers means simultaneously. Simultaneous or to both the powers are given, to the parliament also given and to the state of government also, state legislatures also given. Why? For governing the laws regarding GST, means goods and service. It means that there will be dual control, the central and the state authorities. Then under constitution, we have Article 246A, which gives the power for levying GST by the parliament, also legislature. So what is CGST, IGST, SGST, and UPGST? CGST, it is enacted by central government. IGST, it is enacted by central government. SGST, it is enacted by respective state governments. UPGST, it is enacted by central government of India. IGST, when IGST is collected, it is apportioned between the center and the state in the manner by which Parliament of by law the recommendation of the GST Council. IGST, it will be apportioned between the center and the state. Okay. When IGST is paid by a supplier or a customer, registered person, it is normally apportioned between the center and the state. Okay. Next, GST will be levied on all supply of goods, but not alcohol, liquor, or human consumption. Means on each and supply of goods and services, GST will be levied, but there is exception, that is alcohol, liquor for human consumption. Why? The reason is we'll read below. Then comes Article 269A. Article 269A of the Constitution of India provides that the import of goods or service, import means from outside India, goods and services which will be coming, will be deemed as supply under 269A. Under this, earlier custom duty was there, but now custom is also there. But along with, we need to pay IGST in replace of countervailing duty and special countervailing, that is CBD and special CBD. You might have read during intermediate. Then here only IGST will be levied. Then what are the principles of determining the place of supply? Place of supply, we'll read it further in the future. Okay, so you might be heard of central excise duty, state excise duty, VAT, GST, all those things. So power to levy central excise duty on goods manufactured or produced. Central and normally actually excise duty is levied by the central government on the goods manufactured in respect of which goods? Petroleum crude, high-speed diesel, motor spirit, or known as petrol, natural gas, aviation turbine fuel, tobacco, and tobacco products. On all these products, central excise duty is still levied. But in tobacco and tobacco products, GST is levied along with central excise duty. But above 5 products, VAT and GST will be levied, no GST is there. So once GST is imposed, there will be no duty on manufacture of these goods. Once GST comes on these above 5 products, then there is no sales tax or VAT. Then that is I have written. The power to impose tax on sale of the following. The above things we have read earlier: petroleum crude, high-speed diesel, motor spirit, petrol, natural gas, aviation turbine fuel, and alcohol liquor for human consumption. On all the 6 items, we will be paying sales tax, that is VAT, along with central excise duty. But the last row, it is written alcohol liquor for human consumption. As we have already said that GST is not levied, so state excise duty and sales tax, that is the VAT or CST. Next, Article 366(12)(a). So here it is written that normally now the present system is we levy state excise duty and sales tax on alcohol liquor for human consumption. Okay, till it comes under GST. As a result, what happened? As we have already said, the commencement amendment, constitutional amendment, when the following becomes an act, it becomes an act, then the act is started. Okay, for that reason, see, as a result, the following will become an act on 12th April 2017. Central Goods and Service Tax Bill 2017, Integrated Goods and Service Tax Bill 2017, Union Territories Goods Service and Tax 2017, Goods and Service Tax Compensation to States Bill 2017. The central government notified on 1st July. Okay, and from 1st July, GST Act came. It was implemented, and all the laws were applicable to all the countries. Sorry, all the states. I'm sorry. Okay. So, what is GST? GST means it is a tax on supply of goods and services, or both. means on goods and services. Also both means on supply we have combined these goods and services, but not on alcohol for human consumption. We already read above. Okay. And GST is a value-added tax. Means what do you mean by value-added tax? Means tax levied on something value which is to be added. When a distributor or a manufacturer or a retailer adds its profit or margin, the portion the added the value on based on that a percentage or a proportion of that value is known as tax. That's called GST, value-added tax. And GST is a destination-based consumption tax. Destination means or destination-based consumption tax means when a supply happens, GST is levied or GST is collected or GST goes to the state which or in which destination occurs or the final consumer consumes the product. GST or the tax belongs to that state. And GST also offers comprehensive and continuous chain of tax credit. When we purchase something or a supply, we pay to the seller some GST portion. So that GST portion we can avail as input tax credit to pay on the further supply of the good, which will detail we can read below. It is just the introduction. GST where burden is also borne by the final consumer. As we have already said, it is consumption based and a product or a service is normally consumed by the final consumer. So it is the burden is borne by the final consumer. GST eliminates cascading effect. What do you mean by cascading effect? Means tax on tax or more than one type of tax is levied on a single value, either goods or services, but we levy more than one tax. That is called cascading effect. To eliminate that, GST is the solution. And it is also uniform tax rate because all India same tax rate is there. Okay. So now we'll go next. What is the advantage? I have already read. One nation, one tax means all over India. Whenever you supply, there will be one nation. There will be one tax rate. Whether you purchase a soap here or in Andhra Pradesh or Karnataka or Kerala or Delhi, there will be the single tax rate. Okay. And there now earlier it was VAT was there, CST was there, service tax was there, CAD was there, SAD was there, exchange was there. Now we no need to follow the compliances and we no need to pay the taxes under these acts. We need to pay only GST. So our complaints were reduced. Okay. That and also it is as we have already read about removal of cascading effect, tax on tax removes tax on tax, and it helps the business for ease of doing business. Now, as all the compliance costs were reduced, so normally the cost of production will be there, because of which demand will increase. Ultimately, it will rise in the production of goods, it will boost India's initiative, or it will help to increase the GDP. Okay. Now, why we need GST in India? Okay, to cure the illness of the existing indirect tax regime. Yeah, it is true. Why? Because at each stage of the production process up to the point of being sold to the final consumer, there is also a tax on tax on tax. I will give an example below. Okay, don't worry. So one of the fundamental feature of GST is that it is a seamless flow of input tax credit across the chain. This is also one more advantage. Okay, seamless flow of input tax means from wholesaler to distributor to retailer. The input tax credit paid by the buyer normally flows through the chain. Okay, from manufacturer of the goods till it is consumed, means the retailer, as a non-retailer to the final customer. Now, non-integration of VAT and service tax causes double. I already told that I will be explaining the cascading effect. Okay, here I will give it. In the pre-GST scheme or pre-GST regime, we will consider an example of restaurant services where we used to pay VAT on sale of food and service tax on supply of services. And there is no setup. That what do you mean by no setup? VAT paid is not allowed as input tax credit against the service tax, and the vice versa. Means the service tax paid is not allowed as input tax credit against VAT paid. Okay, we'll do an example. Okay, example: what is the service tax? Service tax and VAT on a restaurant bill. Total food bill 1,000. Service charge 10%, 100 rupees. So total value is 1100. Okay. So on VAT at the rate 14.5% on 1100 is 159.50. So now total bill before service tax is 1259.50. Now service tax at the rate 14% on 440. Why it is 440? Because on 1100 60% abatement is there. 40% is taxable. So 1100 into 40% is 440, and on 440 we are going to pay 14% service tax. That comes to 61.60. Now we add Swachh Bharat sales, Kisan, KKC, and the total value becomes for the customer is 1326. So what do you observe here? On 440 amount, we are paying double taxes, tax and tax. See, we are paying 14.5% VAT also and 14% of service tax also. And also there is no setup of the input credit. So there is double tax. This is called cascading tax, cascading effect. So to eliminate this, GST becomes a solution. Okay. And here given a case law, you might read this. It will give a broad idea. Okay. Here it says Hotel East Park versus UI 2014-35 STR 433 Chhattisgarh. The quantum of service is tax. They explained in Rule 2C of service tax. The High Court held that it is intra-virus. What do you mean by intra-virus? You might have heard in intermediate ultra-virus means beyond the power. So it's the opposite. Our antonym we can say intra-virus means within the legal power of the Article 366. For the High Court held that no VAT can be charged over the amount meant for the service, and that amount over which service tax has been charged should not be subject to VAT. Means on a single value or on a value, if you are paying or you are charging the VAT, you cannot charge simultaneously service tax. If you are charging service tax, you cannot charge VAT. Okay. So that the final is the customers are not double taxed over the same amount. Okay. So now we're going to see one more example where we'll see the sandbag credit after manufacturing stage to the dealer. Okay. Suppose the value of goods is 1 lakh. Then the manufacturing excise duty is 12.5%, 12,500. Total is 1,12,500, on which we are paying VAT 14.5%, that is 16,313. So 128813. So here what happens? We are paying excise duty and VAT, but as we see in GST, we need to pay only GST, no VAT, no excise duty. So here also two types of taxes we are paying on the same value, 1 lakh. Okay. So cascading of tax on account of levy of CS and CST central state also. See, here we'll go for another example. Mr. C of Calicut, being a dealer, purchased goods from Mr. H of Hyderabad by paying central sales tax up to 1,000. You might be heard CST. Okay, CST is not allowed as an input tax credit against VAT payable on local sales. You understand that? You might be remembering from the intermediate. Okay, so we'll see example. See. Goods purchased from H by paying 2,000. Now Mr. H purchased from C, Calicut, by paying accession. Now when Mr. C is selling to E, he needs to pay VAT of 2,500, but he will not get the input tax credit of CST that is paid to Mr. H. Okay, so here this is the demerit of pre-GST regime. So here now, but on GST we can take. Earlier it was not there. Okay. So here are some of the examples of some central indirect taxes and state indirect taxes. So central indirect taxes, central excise duty levied under medicinal and toilet preparation, service tax, CVD on import, special CVD on import, central surcharge, central cess. These all are central indirect taxes. And what are state indirect taxes? State VAT, entertainment tax, CST, entry tax, purchase tax, luxury tax, betting and gambling tax, state surcharge, state cesses. Okay, all these are subsum, means all these are taken under GST. Means now for all these sub duties, we need to charge only GST, none of these taxes. Okay. Now we'll go a little further. Non-availment of seamless items means VAT dealers were not able to take the credit of excise duty charged by the manufacturer earlier. So now in GST, as it is a destination and consumption based tax, so revenue of SGST ordinarily accrues to the consuming state. Okay. So see, earlier when a dealer purchased from the manufacturer, he used to bear the excise duty and he cannot take the excise duty credit. Okay. But under GST, when the dealer purchases from the manufacturer, he need to pay the GST, for which he will get the input tax credit to use it on the supply of further supply. And the GST that is paid, it is ordinarily accrues to the consuming state. Then suppose a supply is done from Odisha to Andhra Pradesh. There are two states at there, and IGST will be levied. Okay, IGST will be levied, but IGST will be proportionally divided between the central and the state. But which state? Odisha or Andhra Pradesh? Any guess? Yeah, obviously Andhra Pradesh, because consuming state, which state is the consumer of the supply? Andhra Pradesh. Okay. So now we'll go further. Then what is the tedious process of issuance and collection of CST forms? Earlier in CST sales and purchase, we need to submit Form C before purchasing any goods or services from the different state. Because if we submit C form, we need to pay only 2% CST, or else we need to pay the higher amount. Okay. Now in GST scheme there is nothing CST or Form C form required, or for branch transfer from HEX is required. Nothing is there like that. Only GST. Okay. Now, sharing of data between center and state and various boards. Earlier, what used to happen is, the central maintains its records or any accounts or data or information, and the state has itself data. There was no common sharing with that. But now under in GST, every data is shared on GST portal, and the data can be used by the central government and also state governments. And for there are two limit, you can see, suppose the turnover is 1.5 crore is assigned, then the GST collected will be 50% proportionally distributed between the center and the respective state. But if the turnover is less than 1.5 crore, then the ratio will be 10 is to 90 between the center and the respective state. And this choice is not assigned to the SSEs. Okay. You need to observe this. As you have seen, GST came on 1st July 2017, but for Jammu and Kashmir, it came on 8th July 2017. Okay, so there is 7 days gap is there. So after GST was implemented, GST Act, after 7 days, Jammu and Kashmir, it was applicable. So once Jammu and Kashmir was applicable for GST, then after that we used to say one nation, one tax. Okay. Now, what is dual GST? What do you mean by all over the world, wherever you see other countries have only one GST, but here we have dual GST. Why? There is CGST and SGST for interstate sale. Okay. See, SGST means state GST, CGST means central GST, state GST, SGST means it will be collected by the state government, and CGST it will be collected by the central government. Then what is IGST? IGST is integrated GST, which is levied when there is interstate supply from one state to another, or one union territory to another union territory, or one state to another union territory. At that transaction or that event, GST is collected by the central government, but it will be distributed to the central government and the consumption state. Okay. Then what will G? See, yeah, SGST, see, just all this it is given just revenue source of the central government. SGST, it is collected by the state government or union territories. But one point to be noted here is, see, for union territories, there is a separate act called UTGST Act. But the union territory also have state legislatures. Okay. For example, Delhi, Pondicherry, and Jammu Kashmir. These are the 3 union territories which have state legislatures. So for them, SGST will be applicable and UTGST will not be applicable. Okay, this point to be noted. Then UTGST, you can see there is no state legislatures. So there is a notice that there are 28 states and 8 union territories, of which 3, Delhi, Pondicherry, Jammu and Kashmir, have legislatures, state legislatures. So SGST will be there. Okay. Now methodology of flow of revenue between the center and the state. As I have already discussed, okay, flow of revenue. When a tax is collected, 50% of the state and the state which are consumed in the center, nothing else. Here example is that I have already discussed an example. Okay, so I'm not going into it. Now GST in union territories without legislatures. So out of 8 union territories, we have reduced 3. So less raised is only 5. In these 5 union territories, we don't have state legislatures or legislature. So UTGST Act will be applicable, and when an interested supplier is there, will charge CGST and UTGST. If there is interstate supply, we'll charge IGST. Okay. So which are those 5 union territories? Lakshadweep, Daman and Diu, and Dadar and Nagar Haveli, Andaman Nicobar Island, Ladakh, Chandigarh. This Daman and Diu and Dadra and Nagar Haveli, earlier there were those were two separate union territories, but now it became one separate union territory. Okay. Now here given it is the definition of union territory when it was amended, all those things, merged into single union territory within force from 26 January 2020. And IGST. IGST would be levied and collected by the central government on all interstate transactions of taxable goods and services. Here you can see how to decide whether IGST is applicable or CGST plus SGST is applicable. This is the major issues. Okay. So for deciding the fact, we need to consider 2 points. First is location of the supplier and the place of supply. Location of supplier means the seller, where it is registered. That is the location of supply. And for the place of supply, we'll discuss in different chapter. Then you'll understand. For the time being, you understand, we need to consider 2 points. If these 2 points are in the same state, we'll consider it as interstate transaction and CGST, SGST will be applicable. If these two are into different states or different union territory or one state or one union territory, it will be called as interstate transaction and IGST will be levied. Now, interstate versus interstate from stock transfer. See, this is the major point and it's very important. Okay, stock transfer. Earlier, you might be remembering. Okay, Form H was used for stock transfers between one state to another state. Okay, here what the thing difference is. Suppose we have taken the example of Tamil Nadu. Okay, we'll also consider Tamil Nadu. In the state of Tamil Nadu, factory is located at a different place. The warehouse is located at a different place. For the timing, case 1, both factory and the warehouse has the same registration. Second case, both the units, means the factory and the warehouse, have the 2 different GST registration. How the stock transfer will affect? Okay, first case, when the factory and the warehouse have same registration, no GST will be payable. We need to ensure that Rule 55 challan is there. Rule 55 challan. With Rule 55 challan, we can initiate the transaction and we need to do the stock transfer. If within the same state, means what is the case 2 is Tamil Nadu in factory is located registered under different and the warehouse is also registered, means both are differently registered, then we need to charge GST. Okay, and it will be obviously intra GST because within the state, so CGST and SGST. If it will be, if suppose the factory is located at a different state and the warehouse is located at the different state, there also GST will be applicable and will charge IGST. Okay, here example is there. See, branch 1 is located in Telangana, head office is located in Telangana. Okay, so suppose the head office to branch something transaction stock transfer goes, and see here is an interstate branch transfer. Interstate because within the state some transfers are there, so no GST will be there. For this transaction, we need Rule 55 challan. Okay, but when head office and branch is located different, Andhra Pradesh, different state. Okay, so both separately registered will be there. So interstate branch transfer will act at IGST. Suppose we have a warehouse here, but it is registered differently. In separate registration is there. So we'll charge CGST and SGST. Conclusion. The same thing only it is, but how it is maintained, how the tax, once the tax is collected, who will be proportionally dividing between the center and the consumption state. So how will be adjustment will be there? It is made by the central clearing agency. SSCs will not be concerned how to adjust. It will be the full headache goes to the central clearing agency. See here, example 5 is there. Mr. C of Chennai supplied goods or services for 20,000 to Mr. M of Mr. Madurai. CGST and SGST applicable at a 9% hit. So what will be the total price charged by Mr. C and who is liable to pay GST? Here comes, see, supplier goods is 20,000, CGST 9%, SGST 9%, total value 23,600. The price will be this only because it is the interest rate. But who is liable to pay? Obviously the supplier. And who is the supplier? Mr. C. Same thing. Now we'll go to next example. It is connecting to the above example. Okay, so recall. See, Mr. M of Madurai supplied goods for rupees 24,000 to Mr. S Salam and Mr. M purchased the goods for 23,600 from Mr. C. So C to M and M to S. Here we need to buy what is the total price to be charged by Mr. M, who is liable to pay GST, and what is the net liability of GST. So for the value of supply, will take 24,000 as it is given in the question. Okay, on 24,000, CGST 9%, SGST 9%. Why? Because Salem and Madurai both are in the Tamil Nadu and they're in the same state. Okay, so 24,000, CGST 9%, SGST 9%. It will be 28,320. So who will be liable? Obviously, Mr. M, because M is the supplier or seller. Okay. So now how, see, we have already done bit A, bit B. Now we go to bit C. What is the net liability of GST for Mr. M? Okay, how much amount? You might be thinking 21,600, 21,60, 21,60. No, because when M purchased the goods from Mr. C, CMA, he has already paid some amount, no? In the above example, how much amount? 1,800 and 1,800. So we can take the ITC, no, input tax credit. So we'll be settling, we'll do setup. From out of 2160, we'll reduce 1,800. The net liability will be only 360 CGST and 360 SGST. So we need to pay only 360 and 360. Okay. Now here also given the same thing. Let's end up our session today and we'll be continuing further tomorrow. Here are some examples are there. 3 to 4 examples. You can do it by yourself. If you have any doubt, you can comment or you can ask me. Tomorrow we'll start resume from here GS10. Okay. Bye.